Hey, Crypto Hotep here again with another investing video. This is week 3 of the family portfolio in M1 Finance. If you're not familiar with my thought process and methodology with the family portfolio, or kind of find yourself lost, then click the first week 1 video of the family portfolio just to get a deeper dive into the project or the investing project that I have with my family set up. And in a nutshell, basically, my family and I picked several stocks that within M1 Finance you can have in somewhat of like sub portfolios within one big one. They call them pies. So I have my stocks, my wife has hers, and then our kids have theirs. And basically, this portfolio we throw in, you know, a little bit of leftover money if as we see fit in here, and I go over the balances and the activity on that portfolio each week, and then cover a stock within that portfolio. And all in all, I try to make these videos just to track the investment journey that my family's having now, and then also to delve kind of my expertise or even lack thereof within dividend investing. And hopefully, these videos will be helpful even for my kids further down the road. And if you find the videos helpful, feel free to like, subscribe, comment, and all of that. But before we begin, nothing that I say is financial advice. So please consult with a professional before you do any type of investing. With that being said, today we're going to go over some dividend activities, talk about the balance, and then also speak about several of the buys that we recently had in the portfolio because we had some contributions. And then also one holding that I'm thinking about switching out, and a holding that I'm thinking about adding to replace it. Okay. So with that being said, the family portfolio here is on the upswing, as you can see. The balance as of today is 491.84. I think last week, if I'm not mistaken, last week right here we were about 478, so 478.80, and we're at 491.84. So good movement. Weighted rate of return as of right now is up 6%, which is also good. And just scrolling down here, before we do that, let's go up and let's look at the activities here and see if we have any dividend activities here. As of right now, the only dividend activity we had was last Friday. We received a dividend from McDonald's. Okay. And I think this, if I'm not mistaken, this was from my pie. So I also hold McDonald's. Our oldest also holds McDonald's, but I have a little bit more money into McDonald's. So I believe this one is my holdings for McDonald's here, and that dividend for that. Staying on the activity, we had 4 buys here today. So we had 4 buys. We had Nintendo, we had Celsius, we had McDonald's, and we had Apple. So I kind of know who these are for. So Celsius, my wife, just adding to that Celsius bag of hers. Nintendo, I know that's either for our middle or our youngest. McDonald's, which is for our oldest, and then Apple, which is I know for my youngest. So if this was for our youngest, then Nintendo is for our middle. So 4 buys today, and we're just looking at DCAing into the small account and just growing it that way. I don't have it set up where I'm taking individual trades necessarily and just putting money into separate trades. I just, as soon as we get some money, just kind of leftover cash or what have you, I put it in here. I let the M1 finance algorithm do its thing in terms of percentages and allocations, and then we just settle at that way. Okay. So jumping into the stocks here. So we'll save my stocks for last, but our oldest, we'll go from our oldest here. And our oldest stocks, very, kind of black and white, right? Talked about McDonald's and Apple, both of them currently in the red year to date, which is fine. Um, nothing too big to report there. Then to our youngest. Our youngest has had some volatility, I will say, with the stocks, mainly because of this Tesla. So our youngest added Tesla to their portfolio. And ironically, they added Tesla right when the big dip happened with Tesla. So they added it. We wound up starting to DCA into Tesla, and we're wind up catching some nice gains currently with Tesla up 2%. So that's fantastic. Again, Apple's on a slow bleed right now, as we all see. Um, DOJ lawsuit as well. So this isn't a consistent downtrend over about 5%. I still love Apple, still holding tight to Apple, so I'm not really worried about this in the long term so far. Um, we'll look at my wife's stocks. So as you guys know, my wife's stocks are all in the green, which is amazing. And as you know, my wife primary holding that has been carrying our portfolio is the Celsius holding here, up an amazing 33% year to date. You love to see it. Followed by Google and Pepsi, both up very considerably as well. So, very good portfolio action as of right now. My wife's portfolio is up 17% year to date. It's crazy rate of return there. So, all good stuff there. And then our middle stocks are similar to the youngest with Nintendo, as we all know, Costco, and then we have Amazon. So, kind of I would say in the middle right now. Weight of returns about 1%. Completely fine. Nothing with dividends as of yet because we haven't held these stocks long enough yet. But as soon as as soon as that dividend train starts moving, these portfolios, especially my family's portfolios, will start catching up steam as well. And the four contributions that were made, or those four buys, I should say, they all went into my family members' portfolios here because with the algorithm with M1 Finance, they're trying to balance out the whole portfolio because we are obviously weighted, or my stocks are outweighing everybody else's currently. Okay. So last but not least, let's go into my stocks here. Um, my stocks, most of the categories were in the green. So nothing too surprising here for me. Pharmaceutical was down a little bit. We had Pfizer got a little bit of good information or good news this week. J&J was down over 2% as well. So nothing too kind of instrumental in terms of my portfolio or groundbreaking as of yet. One thing that I did want to go over though is I have considered in taking a position out of my consumer staples and shopping and adding another dividend related stock in lieu of that. And what I am thinking of taking out is right here, which I would like to take out. And I did set that pending order to take out Nike. So I'd like to take out Nike, replace it with the TJ Maxx company here. And we'll go over that right now because Nike's going to be the stock that we're going to cover in this update. So switching over, with that being said, just a step back here. So with the family portfolio, all in all, we're trending in the right direction. We've almost cracked 500. Again, small account, but we're building it up brick by brick. So year to date, decent amount. Rate of return is over 6%. Market gain of about $15. Dividends we've earned almost $1.50. So that $500 mark is inching up closer and closer, and I think we'll get to that very soon here. With that being said, we're going to jump into the Nike stock and my reasoning. So as I've told you guys, earlier in the year today, I made it a goal of mine for this year to invest more into dividend-related stocks to create some sort of passive income for myself, my family, and our future. And, with that being said, most of the stocks I've done research on, some of them I haven't, Nike being one of them. So I did do a little research on Nike. I did like Nike the company, so I figured, what the heck, we can throw Nike in here in the portfolio. It has a dividend yield. Kind of what could go wrong, right? Well, um, as I started looking more and more at financials and companies and cash and just understanding a little bit more of the financial statement when selecting these dividend stocks, it had me look at Nike because of their earnings today that dropped. And as you can see, negative, very negative sentiment across the board in Wall Street for Nike. One of the things that struck me was this big cutback that they're currently doing on classic shoes, and that's basically to save money because of other competitors. That kind of that took me a step back just a little bit, just because that didn't seem like Nike. It didn't seem like the Nike I knew. So that raised my ears, or perked my ears up. So I wanted to see what their financials actually looked like, because I said to myself, I haven't actually done that with Nike. And so looking at Nike's revenue here, it was a little underwhelming for me. And then also looking at the dividend. And what I'll say is, yes, the revenue itself has increased, which is good. It's increased year over year, particularly 2020. Obviously, I I kind of I give the companies a mulligan for 2020, just with everything that happened in 2020. But as you guys know, I always look at net income. I would like to see net income increasing. It's stayed relatively stagnant here at about around 5 billion, 4 to 5 billion here, which not a deal breaker. That's, it's okay. So not really good net income growth currently. On the balance sheet, cash and cash equivalents have actually gone down, and cash growth has gone down in the negative, right? So that's one thing I always look at is cash. How much cash do the companies have lying around? I like to see good cash growth on companies as well. Um, and then another thing is the retained earnings. Retained earnings have gone down as well. Retained earnings are earnings that aren't paid out in a dividend, but more of cash for the company to invest in the business itself. So that has gone down. Um, let's look at, and again, just kind of looking at cash flow and net cash flow. So net cash flow in the negative currently, and you know, it, free cash flow year over year is up when compared to last year, but again, it's somewhat in the same spot that it was. And then with all that being said, kind of going to dividends, the payout ratios increased a little bit. Not again, not a huge deal breaker. You know, payout ratio for me, it'll have to be kind of between like 55 and 60% for me not to take the stock. So this isn't a huge deal for me. What necessarily is a huge deal is the disparity between the dividends and then the dividend growth, because the dividend growth has been slowly but surely coming into the single digits, as you can see here. And that's over a 10-year period. So every year we've had decreased dividend growth, which me personally, I would rather have a smaller dividend yield, but have more explosive dividend growth over the course of the years so I can just make up that yield in the growth itself. So with those things being said, and just kind of seeing where Nike is in terms of cutting back, trying to save money, and having more competitors in that market space, I chose to go with TJ Maxx, which was kind of a total stock out of left field for me. And we can work backwards here. So we can go to the dividend yield. So decent dividend yield, payout ratio below 35%, which is good. And dividend growth, you're looking at 12.71%. Dividends have gone up. One thing that hurt TJ Maxx was 2020. So there was a stagnant period in 2020 where there was no dividend growth, like between 2020 and 2021, where there was no dividend growth. And you'll see right here, there was a whole patch. It's almost a year that there were no dividends either. Again, understanding what happened, I get it. But with that being said, we did go to the financials. Financials look really good. Again, 2020 down 22%, understandable. But if we look at it, again, it's trending back to where it was pre-pandemic and even higher if you look at that. Revenue growth, great for me. If we look at the balance sheet, cash equivalents, somewhat stagnant but not decreasing. Okay? Cash growth has finally increased. Okay, again, 2020 took a hit on the cash growth. You can see that in 2021 by 40%. And TJ Maxx has slowly but surely chipped away at that, which is very good. The only other thing I didn't really like was the retained earnings. The retained earnings were at zero. That was kind of an eye opener for me for that. So that's one thing that I did take note of. Even with that though, their total debt is going down. Long-term debt is going down. Current debt as well. So we're trending in the right direction, I would say, with TJ Maxx. Again, and the biggest thing with me is their net income. What's the net income look like? That's the income after all the bills are paid. Net income's up. Yes, again, 2020 hit TJ Maxx very hard with all things considering. It rebounded fantastic in 2021 and just kept going up here. So I think that speaks a lot to the business model of TJ Maxx. The net cash flow finally in the positive here. And again, I believe that was pre-pandemic, if I'm not mistaken. So yeah, pre-pandemic. So again, this was 2020. It sees the effects of 2020 and 2021 for net cash flow. That's why we're in the negative. And again, it's slowly but surely chipped away at that. So this is the main reason why I wanted another company in that retail space that, one, had a pretty good track record, and then also a strong balance sheet as well. And that's why I picked to replace Nike with TJ Maxx. And As you guys know, I am a chart guy, so we look at the charts of TJ Maxx, and we can start at the weekly, and you'll see TJ Maxx chart is very bullish, and it has consistently gone up since. I can just keep scrolling back here. It's pretty amazing how this consistency of TJ Maxx. I was not even aware. I was not aware of the game. But one thing I always look at is the 100 and 200 moving average, because that's usually a predicator. It has not chopped around since. It hasn't even. It didn't even chop around in 2020. It chopped around in about 2008. And what I consider chop is basically below that 200 moving average, but there has to be candles consistently closed below this 200 moving average, which it did for a span of time, only to come back up and continue the trend upwards. In 2020, what did it do in 2020, you say? I'll show you. As with anything, 2020, a big gap down right here, which fine, but guess what? It did not break this 200-day moving average. But Crypto Hotep, the price went down past it. Yeah, but it didn't close, and another candle preceding it did not, or another candle succeeding it, I should say, did not close in the red. In fact, we had a green go right back up consistently and stayed along this 200 moving average. So it never closed. I don't consider this a close below that. And guess what happened? It just continued to move back up. Even here, boom, boom, boom. This little close, but again, price went back up to 200, and we're still moving upwards here. It's a pretty remarkable sight. I was not aware of TJ Maxx's game at all, but I'm impressed by this stock performance and this price appreciation of the stock itself. And if we look at the key levels, we have key level at 82.72, our monthly key level at 92.64, and then we have our dailies here. Currently price at TJ Maxx is sitting at 99.18. Just to see where we may go and what I am thinking, I'm going to take my Fibonacci tool out and just kind of predict what we have going on here. So switch to the daily, because that is the chart that we typically read and we typically trade from. So as you can see, price did break above this, break above the monthly, as you can see right here, came back, retested beautifully, stayed right here in line, came up, broke above the daily here, came back, retest, and then made a new high. So this is an all-time new high. This is at, let me bring this down. This is at 102.84. And then we have price come back down into the golden zone of that Fibonacci beautifully here at between 0.5, 0.618, only to bounce once and twice. Looks like a double bottom here. And my assumption is we are going back to 100, and we would at least tap 100, and I would say 180, if not past 102 at some point. So I think this uptrend is still going strong. It's been going strong for over a decade now for TJ Maxx, and I think this will be a good addition for my shopping and consumer staples portfolio within M1 Finance. But with that being said, guys, thanks as always for your time. Hopefully these videos are helpful. If they are, feel free to like, subscribe, tell me things that you would like to see or chart or talk about. And with that being said, happy investing.